So in today's session, we are going to introduce accounting. We shall see the nature of accounting, the main purpose of accounting, the objectives of financial accounting, who are the users of accounting information, what are the elements of financial statements, and we shall also see the accounting equation. So pay attention. Let's go by the definition. What is accounting? By definition, accounting is an art that involves identifying, measuring, classifying, summarizing, and also recording in a significant manner and in monetary terms, transactions and events, and then the interpretation of that. So this involves the recording, summarizing, and reporting financial transaction of business or organization. So we have here there are many branches of accounting. We have financial accounting, cost accounting, and management accounting. Let's go by definition. What is financial accounting? The financial accounting is the branch of accounting that deals with recording of financial transactions in the books of accounts and financial statements. It deals with what? Recording the financial transaction in the books of accounts. So what is cost accounting? Cost accounting is the branch of accounting that specifically deals with cost determination, setting of standards, preparation of budgets, the comparison of actual results with the set standards or the budget with the what was set, the budget that was set, identification of the variance, whether there is a difference between what was budgeted and the actual, and the rectification of that. So in other words, I can say that it helps the business to determine how much it costs to make a product or to offer the service. So what is the management accounting? When it comes to management accounting, is the branch of accounting that deal with the use of accounting information for planning and decision making. Yes, it deals with the accounting information for planning and decision making. So what are the main purposes of accounting? The purpose of accounting, as you have seen by definition, we have seen decoding in the definition. Do you remember? So decoding, accounting mainly records or deal with decoding of financial transaction in the books of accounts and financial statements. So it measures the economic results and expressing them in monetary terms. Another purpose of accounting, you have stewardship. It makes the managers accountable as stewards to the shareholders. Here the managers are being responsible. Yes, here I can say that the managers are being responsible for managing and taking care of something or of the resources of the business on behalf of the owners, the shareholders. Yes, we have also measurement of the business performance. The accounting also helps in measuring how the business performs. We shall see how we calculate the business profit. We have also monetary and control. Accounting information enables management to monitor the results and taking action if necessary. We have also planning. Accounting information is useful in formulating plans for the future. For example, we have what we call the profit forecast, which helps to estimate the future profits. Another example I can give that helps in planning, we have a break-even analysis. We shall see that in the next section. So let's go to. We have also decision making. Accounting information is used by both the investors and the management in making various decisions. We have also calculation of tax. The accounting information helps in calculating of tax. This is mainly used by the tax authority. Here in Rwanda we have RRA, Rwanda Revenue Authority, uses the accounting information to determine and assess the business tax to be paid. Is to know how much or to know the real tax that will be paid. So we have also communication. The accounting communicates information to both internal and external users for various purposes. Yes, I think we know the internal and external users of this accounting information. We shall see that. Yes. So the objective of financial accounting. The main objective of financial accounting is to record business transaction in the books of accounts and financial statements. That's the main objective of financial accounting, just to record a business transaction in the books of account to financial statements. So, who are the users of accounting information and why are they interested in that? On top, we have what we call the shareholders, the owner. Why do they need those information, accounting information? They would like to have information on financial performance, financial position, and know the value of their investment, whether there is a profit or return on their investment. We have also customers. Customers, they would like to know how the business is performing and its financial performance, and whether they can rely on the farm for the future supplies. Yes, they want to be sure if the farm is stable and is able also to keep supplying them even in the future. We have also suppliers. Suppliers, for them, they want to know if the farm is able to pay up for the goods and services provided, and when the payments follow due. Yes, for them, they want to know, for their safety, they want to know if the farm is able to pay those goods that were given on credits, as they fall due, as the payments fall due. Yes. For managers, they require the accounting information for decision making, planning, and control. On financial institutions, all those lenders like banks, like these insurance companies, they want to know the performance, the financial position of the ability to pay back the principal amounts when it is due, including its credit worthiness. Yes, for example, if the entity has acquired a loan in financial institutions, they need this information to be sure or to know whether this firm has ability to pay back the principal or that money that was being given to that entity as it's due. So we then have the government and its agencies, as we have seen the RRA tax. They are also interested in this accounting information to assess and gather regulations. Yes. We have also financial analysis and advisors. They interpret the financial information and advise their clients on how much is the value of their investment. We have the employees. They use information to make decisions on their terms of employment, e.g., to negotiate for better terms, including salaries, trainings, and other benefits. We have also public. The public, they are interested in financial performance of the firm. This information will be important for them to assess whether the socially responsible is the firm. So let's come to the elements of financial statements. So there are 5 elements. We have the assets, the liabilities, equity, income, and the revenue and the expenses. Yes. So in the elements that are in statement of financial position, we have the assets, the liabilities, and the equity. What is an asset? An asset is recognized in the statement of financial position where it is probable that the future economic benefits will follow to the enterprise, and the asset has a cost or value that can be measured reliably. So, in other words, the asset is a present economic resource which is controlled by an entity as a result of past events. Yeah. So when it comes to liability, liability is also recognized in the statement of financial position, where it is probable that outflow of resources embodying economic benefits will result from the statement of a present obligation, and the amount at which the settlement will take place can be measured reliably. So in simple, I can say that it is also the present obligation of an entity to transfer an economic resource as a result of the past event. Yes. So then the equity, this refers to the residual interest, yes, in the asset of their business. The total at which equity is shown in the statement of financial position is the dependent on the measurement of the assets and the liabilities. Yes, the equity, as you can see the formula, the equity equal to assets minus the liabilities. So here, in short, or in simple terms, I can say that the equity, it is also the residual interest, of the asset for the entity after deducting all the liabilities. Yes, let's go to the elements that are shown in the statement of profit or loss. We have revenue and expenses. So what is income? Yes, we have income and expenses. And income is recognized in the statement of profit or loss when an increase in future economic benefits related to an increase in assets or decrease in liabilities has arisen that can be measured reliably. Did you get the point? So here, what I can explain in simple terms, an income is an asset or decrease in liabilities that result in increase in equity other than those relating to the contribution from the equity holder. Yes, contribution from equity holder. When it comes to the expenses, as you can see, the expenses are recognized also in statement of profit or loss when decrease in future economic benefits related to the decrease in asset or increase in liabilities has arisen that can be measured reliably. So here also I can give you the short definition that an expenses is a decrease in asset or increase in liabilities, as you can see, increase in liabilities other than those relating to distribution to the equity holders. Yes. So let's go to the accounting equations. Accounting equations, as you have seen, assets equal to equity plus liabilities. So the business owns property. These property are called the assets, as you have seen by the definition. The fund used to acquire those assets are also called equity or capital. Then the other persons who are not owners of the fund may also finance the assets found from those sources are called the liabilities. So in short, when we say when we talk of accounting equation, we mean this: asset equal to equity plus liabilities. Hope you are getting it well. So let's test our understanding. Accounting is the best defined as A. We have recording only cash transaction. Is it true? I don't know. The process of buying and selling goods. Identifying, measuring, recording, classifying, summarizing, and interpreting financial transactions. Preparing only financial statements. Choose. You will choose among A, B, C, D. What is the answer? What do you guess? The answer is C. As you have seen, it involves identifying, measuring, recording, classifying, summarizing, and interpreting financial transactions. This is the correct answer. Which of the following is not a branch of accounting? We have seen three. Do you remember? A, we have financial accounting. Is it true? B, cost accounting. C, management accounting. D, marketing accounting. What is the answer? The answer is D. D is not the branch of accounting. You have seen these three: financial accounting, cost accounting, and management accounting. Yes. The next question. The main objective of financial accounting is to do what? A, to forecast future sales. I don't know. To record business transactions in the books of accounts and financial statements. To increase the business profit directly. D, to control employee behavior. What is the answer? Let's check. What do you guess? The answer is B, to record a business transaction in the books of account and financial statements. Then the question number 4, which user of accounting information is mainly concerned with tax assessment? A, we have customer. B, are they the government? C, employees. D, suppliers. What is the answer? The answer is B, government. Hope you are doing it well, huh? The last question. The correct accounting equation is asset equal to liability minus equity. Is this the right answer? As you have seen, huh? B, asset equal to equity minus liabilities. Huh? I don't know. Asset equal to equity plus liabilities. Equity equal to assets plus expenses. What is the accounting equation as you have seen? What is the answer? The answer is C, asset equal to equity plus liabilities, as we have seen. So thank you for your attention. See you in next session. Thank you.